Welcome back to the Diamond Breakfast. Let's get discussing economics. Now, the Economics Association of Zambia, EAZ, has disclosed that Zambia's economy grew by about 3% in the first quarter of 2025, an increase of 2.2% during the same period last year. But what is driving this growth amidst an energy crisis? We speak more into this with economist Kelvin Chisanga, who is joining us on the show right now. Good morning and welcome to the Diamond Breakfast.
Good morning, dear viewers. Thank you so much for having me.
Now, getting into our discussion and the questions I think that many have right now, the first one would be speaking into the sectors that have contributed to this 3% economic growth that we are recording in the first quarter of 2025. Just give us more into this, because looking into the crisis, the energy crisis that we have now, I think that's the main question people have.
Well, to the contrary, if you look at the intervention that was done in November, where we started importing power, is what has actually augmented to where we are in terms of trying to see the industrial activities and also the uptake that we are also seeing from the information technology aspect as well. And much to this also, the financial services also are actually at peak, performing wonders. Much to this also is the current situation that we have of very good lending patterns, where some of the seasonality sort of requirements in terms of food items have actually come to the fore. So that also has really augmented some bit of challenges as well from that perspective. So what we are able to see is that we've got also a mining sector which is quite sound now. Looking at the 12% that was recorded on aggregate point in the previous year is also what is actually augmenting to what we are able to see. So meaning what we are seeing is that there is a combination and mixture of different sectors at play into this situation. And much to this also is that if you look at the patterns from November up to somewhere like February, we had a very good expansion in terms of activities on the business side as well as investment activities. And it only does that in March we had to see some slowdown in even when it comes to the purchases management index, where we have even seen that there was a slowdown, and also in terms of investment activities as well, we could not see so much. But otherwise, the first quarter, as it stands right now, it's got a lot of different factors that have actually even put to where we have seen this good result as it stands right now.
So given, given this growth, what do you think that government should prioritize to just maintain or to improve the economic momentum that we are experiencing while addressing, issues where energy is concerned?
I think from the whole scenario here, energy proves to be a key fundamental factor, as we know that energy is a basic factor even when you are trying to look at production. And much to this also is that it is a many panacea that has even sustained the performance buoyancy that we are able to see in different sectors, be it in tourism or any other. I think that speaks of a lot of volumes. So what now needs to be done is that we need to sustain some of the policy reforms. As we can see, some of the interventions that have been taken in any sector, such as open access and many others, are actually gravitating a very good energy into what we are able to see. And this is what actually even speaking to the aggregate demand, which is standing positively as we speak right now. We're talking of energy intervention, like solar energy and many other projects which are being sustained there. And that also needs to have a very good atmosphere to also get more attractive of investors to come and actually help buffer the energy diversity. And much to this also, I think the intervention also being undertaken in the mining sector is something that is also supposed to be sustained from that perspective, meaning we need to continuously create that confidence in the sector, because this is a baseline sector which actually speaks of good volume when it is doing very well. And much to this, if we have a very good grip in the mining sector, even the forex market won't be able to actually suffer this fluctuation that we have actually been able to see. It will sustain from that point. Then when you look at the overall aspect of maybe transport and logistics. I think we seem also to see some intervention also being undertaken from that perspective. So what we need to do is just to look at key priority sectors, and much to this, it's an agriculture perspective that needs also to be anchored from there. We have almost recording bumper harvest. We need to have good storage. We need to also to plan strategically to have storage that will also take about 3 years for us to actually have security on food. And much to this also, we need also to enhance export procedures, work on certain elements around regional market, knowing that we've got a lot of dramatic events like the recent cases of Mozambique, where there was an influx. We are also having Congo East having challenges. So obviously the market in the region also is somehow disturbed in that perspective. So we need to look at alternatives as well and contain a certain way in which we can also maybe work out models with Angola and many others who are also seeming to have some potential value in terms of trying to work with them on the trades part. Yes.
Now, when we look at such a growth, 3% being recorded in the first quarter, is this growth that is being felt even at household level? And I ask this saying that previously we saw JCTR record a reduction in the cost of living for a family of about 5.
Sure.
That reduction, is it indication now that we are seeing this? Is this a reflection of the 3% the economic growth that we had recorded in the first quarter of the year?
Okay, so if we are to follow the growth that is being recorded here on the tax, data, it will be difficult for us to quantify that. But on the basis that we were coming from a very dramatic, drought challenge last year, where we even saw literally that the cost of living was not something that was, something that you can speak home about. And what we basically also witnessed was that it was difficult even to contain disposable income at household level. So what we are able to see that some of the growth will not be able to give that substantial effect at household level right now. But as we speak, we're able now to have more time do production in most of the manufacturing companies, and also just basically seeing some of the things that we should be able to access. If it was another case, we would have found a very difficult situation to even face with the essential goods at some point. I'm sure you may be privy to know that at some point it was a talk of a show, talking of mini meal prices and all that. I think that has stabilized. That is what the effect is now. And even when you look at the inflation component, we had the inflation sustained in January, and in February, of course, there was a surging up. As we see now, last month, there was something that actually made the deduction. The basic factor into this will be able to be felt later on. And as we speak, inflation is now going to tutor downward, meaning the agricultural output will be able now to feed into inflation. And that is what's going to happen. So meaning the pricing structure and output will not be able to, erode your expense, meaning even if you get 1,000 kwacha, I think it will be stressed in a way, because it won't be able to just work out from that perspective of where we're coming from. It will work based on the decrease that we're able to see on the inflation side of it. Yeah.
Now, with you bringing in inflation, I mean, with the announcement of the introduction of new banknotes, we had been having different debates with different experts speaking into this introduction of new notes, and some had been indicating that it's a clear view of inflation, and that's what we should anticipate. But you speaking otherwise, why the contradiction in the statements that, especially now that we are at a time which others were saying the introduction of new notes is a clear indication of inflation, and now that the new notes have been introduced, you seem to still hold the view that we'll still be good. This isn't an indication of inflation.
Okay, I would love to put a few things in context if you give me a bit of time, especially when it comes to the currency management system. We cannot curve inflation based on money or bank notes. We can only curve inflation based on production, and that should be local productivities to be upscaled from the local scales. So meaning our inflation pattern is basically driven by import-driven factors. What we're importing is what is actually coming with inflation. And in terms of trying to combat inflation, we basically need to look at policies that can stimulate local content policies and also local industrialization processes, which should be able to speak from there. Now, coming back to the currency itself, the reason why the currency has even come up to this, even if it has got some gray hairs here and there, if I'm able to explain it in that way, there are a lot of challenges that we should be able to see, consultation process and many other aspects that should be able to play out from there. But coming to just the overall understanding of current situation, Zambia introduced 100 kwacha in 2013. And over time, we've seen a very serious erosion that has taken place in 100 kwacha. Remember when we introduced 100 kwacha on the market, we were equivalent to $12. That is 100 kwacha to $12 in equivalent. And that was considered to be a highest denomination in the land. But along the way, this has changed the perspective of playing around that store value aspect as well. So along the way, we found that even when you have 1,000 kwacha in notes, you find that the majority of money notes in that 1,000 kwacha transaction, it will be comprising of 100 kwacha, which has now turned to be a transactional currency or not. So now, looking at the way things should work out, we should have a store of value currency which should be high value, then followed by the medium value, which now the medium value plays a component of transactional component. So now 100 kwacha took that part of low value or medium value and also transactional. So that has actually been a problem. So now for us to cure this issue, we needed to actually introduce something that can be higher value, which can also help to curb some of the aspects that we're able to see, experience the economic effects. So now, as we also had the association of this 100 kwacha, we also faced a challenge where our low value notes, like the 50 kwacha, the 20 kwacha, 10 kwacha, 5 kwachas, were not eating into the bank most of the times. If they go through the banking system, they will not be retained. 80% of them were put aside, meaning we're not eating back into circulation. So that also created a vacuum where if you go to a market like ShopRite or any other, you find that for it to just have a change, they will line up you because hoping that maybe the next customer will have some change. And that was a situation which was very bad. So now, because of those not being sold and also having high velocity or frequency use in the society, that is the reason why this actually came to the fore. So now, Bank of Zambia, and even just the standard of monetary policy situation, we cannot print the small value and then we leave out the other. So it has to be a family of all the notes that should come to the fore, and that is what actually came through to this, issues of introducing new currency on the market. So basically, we have to look at three things: the high note, the medium, and the low note, which should be used now in microtransaction, which we are able to see today. So as we speak right now, you can go to any shop, you will not have a change problem.
Okay.
Yes.
Well, Mr. Sanga, thank you so much for joining us on the Diamond Breakfast.
Thank you. It's my pleasure.
We've been talking to economist Kelvin Sanga, speaking into the economic growth that Zambia has seen in the first quarter of 2025, and that is a 3% growth. Let's go on a break. When we get back, we get more talking into constitutional amendments, and the youths that are backing this will be speaking to the Saka Province UPND chairperson, so do stay tuned.